Joe, my big takeaway is how consistent the nomination of Schmid was relative to our good friend Esther George, who's now a CNBC contributor and had that job. A lot of the same focus, and you'll hear that in this interview when we talk about monetary policy as well as small and medium-sized banks where he has a focus.
Be a little bit different in my thought process of that. My background's banking and regulatory, and I think that the rate, the Fed funds rate, and some of the cost of capital and credit is kind of relative. I mean, I appreciate the real rate. I appreciate R-star conversations, but for me, I'm really pleased that business and the banking industry have seemed to have adapted to this rate range that we're in. So I think there's room, and if it's necessary, I think we've got the tools. I'm an optimist. I think that we might be moving into possibly a nice decade where, you know, you might get this landing that we talk about, but it's more important that we kind of get into a soft wave where the monetary policy can really act and react to a much more normalized or equalized economy.
What's your sense of the balance sheet and the idea that it's being brought down, but is it being brought down fast enough? And to what level do you think it should be brought down to?
I've been fairly public about the balance sheet. I think I wouldn't second guess how it was built and why we ramped it up to where it was on the $9 trillion side. We're down around 7 today. I think there's room to really get more out, to get out of the financial market and faster than we are.
The Kansas City district has typically had a president who has been focused on, say, small and medium-sized banks, and obviously the selection of you appear to continue that tradition. Give us a feel for how those banks are doing.
I've spoke to a number of bankers associations over the last year, and I tell them I'm really pleased and proud that how they've adapted and how their clients have adapted to some of this higher rate environment, and at the same time maintain earnings, maintain capital.
Do we need to worry about another Silicon Valley Bank thing?
I do think that the banks kind of post-08 did a nice job diversifying their commercial real estate strategies. It seems like a lot of the more traditional retail and office space maybe went outside the banking industry a little bit more into private equity. So I don't see that as a looming black cloud.
You can see the full interview on CNBC.com at 10 a.m. I'll interview Philadelphia Fed President Patrick Harker tomorrow morning live on Squawk Box. We're going to talk to Raphael Bostic from Atlanta. That's ahead of Fed Chair Powell's big speech. And then we have Austin Goolsbee at 12:30. Joe, just real quick going into the day and the Jackson Hole meeting, I want to show you the Fed Fund futures and how confident the market now is in coming rate cuts, especially after those minutes yesterday. 100% probability of a 25. 71% probability of November because they're back and forth. But at the end of the day, they're seeing 100% probability of a full percentage point decline by the end of the year. That's where the market's priced right now, Joe.